Welcome to another tutorial. We are going to discuss the concept of cost of goods sold a little bit more. I have emphasized upon this concept in the previous videos, but let me do a dedicated session on this. So on the screen, you have a list of items, opening stock, purchases, direct expenses, other income, sales, closing stock, operating expenses. You need to calculate cost of the goods sold and the gross profit. So, as we have discussed before, the cost of goods sold is also called cost of sales. Number one, this is one thing you should remember. The cost of goods sold is equal to the opening stock plus the purchases plus all the direct expenses minus the closing stock. This is the formula that we will use. What is the concept of cost of goods sold? Cost of goods sold is equal to the cost spent on getting the goods in a final product shape, something that you can sell. So you will have some unsold stock from the last year. The cost of it is the cost of the goods. The purchases of goods in this year again is the cost of the goods. The direct expenses can be factory related expenses which you have to spend to convert the raw materials into the final goods. So these three form the part of the total cost that you bear to convert the goods into final product, to have the stock of goods to be sold. And then you take out from it the closing stock, because this is not what is being sold during the year. This is the unsold stock. So the cost, let me write this, cost of all available stock minus the cost of unsold stock. This is what gives you, this is what leads you to arrive at this number of cost of the goods which are that are sold. And this is what needs to be shown in the profit and loss account, in the trading account. So this gives you the COGS, or the cost of sales. So this is the concept behind it. Using this formula, we are going to calculate the cost of goods sold for, in this case. So the opening stock is 4800. So opening stock is 4800. The purchases need to be added to this, 20,800 there. You have direct expenses 15,110. This is direct expenses. Then you have other incomes, sales. None of this has anything to do with the calculation of cost of the goods sold, so ignore those. You have 5,200 closing stock. You have to certainly deduct the closing stock. You have to add all these things and deduct closing stock, 5,200. And one last item that we have is operating expenses. Now, operating expenses can be direct expenses as well, but you have been clearly given the amount of direct expenses here. So you don't need to worry about operating expenses. Most of these are going to be, all of these are indirect expenses. You can assume that, indirect expenses. That's it. That's all the information we needed from these numbers in order to calculate the cost of the goods sold. So all we have to do is just sum this up. So this comes out to be 7, 0, and 4. Deduct from this 5,200, and you're left with 0, 1, 5, 5, and 3. So 35,510 is the cost of the goods which have been sold during the year. So total available stock was worth 40,710, but you could not sell 52 rupees worth of stock. So the cost which should be compared against the revenue according to the matching principle is only 35,510. So we're done with the first part where we needed to calculate the cost of the goods sold. Now the other part, which is gross profit. How do we calculate the gross profit? Gross profit gross profit is equal to sales minus the cost of goods sold. So you see that cost of goods sold and gross profit are complementary to each other with respect to sales. So the sales number that you've been given is 47070. So 47070 is the sales, and cost of goods sold we've just calculated is 35510. So the therefore the gross profit comes out to be yeah 11,560. So if this is true, that means the cost of goods sold can also be calculated by deducting gross profit from the sales. So that's another way to figure out the cost of goods sold. So if sales are so I think this is pretty clear. I don't need to overemphasize it. So understand these dynamics, the use of these numbers. In this case, operating expenses were not of any use, other incomes were not of any use. You only needed the rest of the information to solve for cost of goods sold and for gross profit. And if you imagine the trading account, this is how it looks, trading and profit and loss account. You show sales here. So sales are 47070, and you show closing stock. So closing stock is 5200, and you have opening stock here. Opening stock is 4800. You have purchases, which are 20,800, and direct expenses. Direct expenses are 15,110. And finally, you now have calculated gross profit as well. Gross profit is 11,560. So this is how the trading account looks. So all you did was use this information to figure out two numbers: cost of goods sold and the gross profit. So in order for you to calculate the cost of goods sold, you used these three numbers and this one number. So this you used for calculation of cost of goods sold. This is the equation which is written here. So this equation, this equation, cost of goods sold is opening stock plus purchases plus direct expenses, and then you deduct closing stock from that. By writing it on the credit side, we are deducting this. So this in effect gives you the cost of the goods sold. So if you reimagine this profit and loss account, it will look like this: profit and loss account. On the one hand, you have sales, which is 47070, and on the other side, you will have cost of goods sold. Directly, you write this figure 35510, and now you don't need to write any of these four numbers because you've written the net effect. And then you can write the gross profit number, which is 11560. I hope this comes out to be correct. Yes, that's right. 47070 is the total. And this is the number, this cost of goods sold, this is the number that you see in the income statements. This is the the consolidated number that is shown, that is presented to the public. And of course, you can go to the details, the notes, other things to look at more data. But internally, when we prepare income statement, we like to give all the details in the profit and loss account, so that we know how these numbers were arrived at. And as we move forward, we will do more analysis based upon these numbers, and then you better have the breakdown of these numbers. Alright, so to summarize, in this video, we learned the concept of cost of goods sold. You were already aware of it, but I gave you some more insights as to how these three numbers are related, and the fact that COGS, cost of goods sold, is shown in the final accounts, and you can look at the back end, which we just learned. The back end of it is opening stock plus purchases plus direct expenses minus the closing stock. So that's all I wanted to discuss in this video. I'll see you in the next tutorial.